Hello. Hello. Welcome to another ESP to stream. Today is Tuesday, January 23rd. It is 9:18 a.m. Eastern Time in the US. Okay, I'm opening my window trader chart. I had to close it because I haven't closed it over the weekend, and it has just too much data, and it can become slow. So, time I close it and then reopen all my charts again. That's what I'm doing now. This market, we had a breakout last Friday. Boy, this breakout was it was painful to watch. It was a trending day. This was another trending day, I believe, in 2 weeks. Kind of, we had the last couple of weeks we have one trending day. One trending day per week, and it was just painful, man. It was just really painful. The action of the day looked like it was, rather than being a trending day, it looked like a rotational day, you know. There was one clear opportunity on this day. Very elongated, by the way. We have 4 distributions this day, but let me show you the opportunity here. It was this day, this inside bar here. Now we have an inside bar, market already breakout of the previous day range, but we still have the all-time high right there, non-excess here with overnight somewhere in this area. And the breakout, the inside bar just before this high. Okay? The traders go with the breakout of the inside bar, preferable in the direction of the trend. By doing this, all time frames, all time frames. If there was a breakout, all time frames would be in sync, and you have to think about that, right? What can happen if something happens, right? And if you had that, all time frames are in sync, And breakouts, this kind of breakouts, it is hard to sometimes to accept, but this kind of breakouts to all-time highs is a buy. It's a buy. It doesn't matter what the market is doing, or how the market is doing what it's doing, but it is a buy for multiple time frames. Hedge funds, different kind of like more powerful participants of the market. It is hard for some traders to accept that, right? We have a high and we have all-time high. It's time to sell. That's most people, not most people, but quite an awful lot of people will do. Sell the new highs. Why would you like to sell new high? This was a terrible day too. It was really bad, right? You had to have a lot of patience, a lot of conviction. The market didn't have conviction. It looked like it didn't have conviction. It was constantly going up and down, up and down, up. I remember market, I think being, where it was, here, I believe, all this area, was moving one tick at a time. It goes up one tick, comes back one tick. Right? It stays there for a little bit, and then another tick, and then another tick. It was just painful to watch. Painful to watch. Very questionable rally. Very questionable trending day. We have this trending day here, and the other one, I believe, is this. Yeah, you have this day. Notice how many distributions we had here, and all these distributions were closed. Market close all these distributions, and new loans come to this market, to take this market high. Is that going to happen again? I don't know. Now, all time frames are in sync. Okay, we have only 7 minutes before the opening. All time frames are in sync now. All time frames are trending higher. Notice this: monthly, weekly, and daily. All time frames trending higher. Now we have a 23-day range here. All this range, okay. Now we were talking about this range as well. This range, I guess we call it here, right? Call it fields. We call it here. The monthly hasn't changed. There's no change in monthly. Monthly keeps going higher, right? 1, 2, 3 months trending higher. The weekly, notice that this is something I'm noticing. The weekly, this breakout doesn't have the volume. Kind of decreasing, but every time this market is having less and less volume on the upper side. But notice what happened here. Right? I want you to see this. Notice what's happened here. The market is bought from this trend line. This trend line is bought here, and there is a breakout of this range. Now, the market again has for me it's a weak base here, and another breakout here. But the difference of this breakout, because this breakout here was a past breakout. Remember, we have just seen this in the market profile charts, kind of 5 distributions, and we're having the same. We had the same last Friday. The difference between this one and this one is that there was a lot of inventory here. All this inventory. What kind of inventory is this? Ask yourself the question. What kind of inventory is this, right? This is short. This is market short, right? Some rebalance here, or market going higher. In hindsight, it's easier to see, right? This is market going higher because I can see the market up here, but down here that's the thing. It's easy. Everybody can see the charts once they are printed. Okay. Now, this breakout has a lot of short inventory here. Now, this one here, the upcoming breakout, or the breakout we are witnessing now, only have these 4 days, 4 weeks. Okay, there's a lot, kind of like 2 months here, 1, 2, 3, 4 months, something like that, of inventory that was supposed to cover here, and now we have only 4. This is in the weekly time frame. This is kind of like a nuance to me right now. Okay, I can edit properties. I can avoid the no. I mean, once you see it, you cannot unsee it, right? That one there. Now, this is the breakout. This is the current breakout. This is the 23-day range, a breakout. When the longer the range, the wider range, the more dynamic the breakout. That's kind of like a thumb, like a rule of thumb, right? The wider the range, the more dynamic the breakout. Now I'm going to short here. I'm going to be long. I am going to be one step at a time. Yeah, market's trending higher. That's the most important thing. This is coming from a breakout. Now this high here is support, the previous breakout. I'm going to close this. Notice volume. What's happening in volume? Now we have kind of like around average volume here in the daily, okay, in the last couple of days. Now this high here, where are you? Where are you? Oh, way down here. Okay, this is the breakout. This is the base of the breakout. This is the multiple distribution days. This is Friday, and yesterday we have a rotational day. All day long rotational liquidating. Liquidating the late longs, maybe from the overline, and the ones from here. The market was trying to push lower with little success. You know, it get back, it closed the gap. This is the 8th gap, kind of like a 4th to 5th gap that is closed. You know, no, not a single gap has held in this market in the last. My bad. In the last 3-4 weeks, something like that, not a single gap has remained open at the closing. Every single gap in the ES has been closed in the past month. Not the gaps below. I still think that this market has a very poor structure. I have only 1 minute. The structure below is very questionable. Now, a couple, like less than a minute, I keep saying, I keep seeing a lot of volume coming, big blocks coming all over. My main reference in the upper side is this area. We have a lot of volume here in the upper side here, right? This pink area is way higher than all these reds, and is considerable high volume in this area as well. Opening inside previous day range, is an advertisement for chop, and increased odds of rotation. Let's see what the market has now. Inventory overnight inventory is mostly long. The market opened right about at center, I believe. Yeah, about center, right? Yes, sir. This is the previous opening. Where it opened? Right there. At the center previously, right? This kind of wide overnight POCs have the tendency to attract volume. Now, opening volume is notice that is decreasing by the day. It's kind of like back in what usually is, yeah. So it's not as the lowest in the last fall, but still it is decreasing. Okay. The closer the market opens to the center, the higher is the odds of rotation. All right, in between volume areas. Yesterday I placed a couple trades, no, more than a couple trades, and I ended closed negative by the day. And it was a really hard day to trade yesterday. Once you see what's going on, the best thing is, in this case, was stepping outside of the market. I did for a while, but then I came back. I should have known better. That wasn't a good day to trade yesterday, especially after the breakout. And you following these breakouts. Usually there's some rebalancing. The market has a tendency to trade sideways because there is going to be a lot of awful amount of traders that are going to be convinced that the market is going to go higher, and another awful lot that the market is going to break. All right. Ooh, Nasdaq has closed the gap. No, there was no gap in the Nasdaq. Nasdaq is starting the Nasdaq is starting a downside trend. Nasdaq is different. It's a different market than the ES. Nasdaq has actually a good excess on the upper side, and by taking this low, the trend to the upside has ended. Is the Nasdaq going to trade sideways? Who knows? By the way, when the market, I don't trade in Nasdaq. Well, that's what I say, right? I say all the time that the Nasdaq has really pushing to the downside, man. Notice where this market open, and there's no attempt to any kind of rally whatsoever. Liquidation started right away from the open. No, but what do you have, right? Yesterday, that market, all these markets were aiming lower, and there was nothing to the downside. Nasdaq is close to support, actually. Now, let's see what's happening here. It just dries here, this part of the action dries here. I'm wondering here, should I go short here? Should I go long? Yeah, no, there's a lot. This overnight has been overnight POC has been tested. The ES has no excess up here. I was wondering today, I did my homework just before the market open. I was wondering, can this excess be a market getting too long, man? Getting too long that it cannot go higher? Sometimes market just get too long that it cannot go higher. It has to break before it goes higher. Now, check. I'll show you the risk of Nasdaq. Okay. Notice this is single ticks. The ES single ticks. How many contracts we have here? 8. The highest 2,800 contracts. This is the highest. This is 2 ticks charts. Okay. So each level here represents 2 intervals. I mean two prices. It is 25. And 50 and 75, this is 25 and 35.0 and 35.25. 2 levels, okay? 2. And it has 365. Now I'm going to expand this so you can see what I mean with this. Okay, I'm going to make it single ticks, okay? The intervals is going to be single ticks. Okay? Let's check the volume now. Just to compare this one to Nasdaq. This is the highest volume Nasdaq has. 200 contracts here. This is the ES 2000, 10 times more than this market. So, and the value here, do you think how many contracts can you buy here versus here? Meaning, if I had the power to buy, can I buy 200 or can I buy 2,000? So this market is thin. Okay, that's why this market has these wild movements, and this is something that attracts traders. It moves 10, 20, 30 points in 10 seconds. But that actually for me is kind of like risky, right? Especially if you don't have context, if traders don't put the market in context. Now, for example, the ES, I will be looking to the downside. Now we have value. Value is lower. One time frame has ended. And as long as this high remains, this is a market to the downside. This can be a rebalancing of inventory, of low inventory in the Nasdaq. Okay, value is overlapping to lower. Can the market keep moving or pulling value lower towards this low, for example, right? Which is the low of this distribution, which is a late pullback from Friday. That's the question, right? That's what I'll be like. I could settle is down here, and it looks this day looks like a long liquidation. It is clearer in the Nasdaq than in the ES. Okay, the ES you have to be a little bit more open-minded to see, for example, that this can be an attempt to continue the direction of the overnight trade. We have a gap, upside continuation, it just dies here, and then it's liquidation of all the overnight inventory and this inventory here. And then you have this formation, the market trying to push lower, then lower, but each time, notice this, each time the market tries to go lower, traders have less and less rewards for their attempts. So this actually for me can make the short riskier. Right? One, I wouldn't like to short the market just because it's high, and second, the short is kind of risky, even though this market is an all-time high. The short is actually risky in this context, okay? So all these shorts are in risk, can be very exposed now. This is long liquidation. That's why what it says. It is said that long liquidation actually strengthens the market because the late longs are forced out. And this market going lower in the intraday, this market open here, and now goes try to go lower and lower and lower. These actually are longs that are exiting, that are closing positions. These are not new sellers. Can be the odds that that's the case are higher in this kind of situation. Now, is that going to be enough reason for me to go short or to go long in this case? No. I was listening to to a couple of my streams. I know I am dyslexic, but I hear myself talking about, for example, I can say, the market is going lower here, right? So this is a short, but instead of saying short, I say long. And now this is I have a short. That's a Brian short. And when I talk about the daily high, I say this daily low, this was the low of the day, something like that. I hope you put things in context. Just for disclosure, data has made my life harder. I thought I was more stupid than what I am actually when I was in high school. But it was, later I realized it was dyslexia that I have. I am living life. I also have friends or co-workers, pointing that for example, when I there was a number there just in front of my eyes, like 2048, for example, right? And when I spell the number 2048, I would say 2084. Or I can say 2048, but when I write in front of my friends, I write 2084. It's just impressive because if my co-workers or my friends did not point that out for me, I would never realize, right? And that's why I made so many mistakes before. I also work on construction, remodeling, and there were a couple times when I built these estimates, and I work for losses because my estimate was, I mean to say to write one thing but ended up writing another completely different, very very different. number. All right. If you have any questions, please just let me know. Outside here, we have a white overnight POC. This kind of POCs have the tendency to attract the market back and forth. This has been taken, may come back down here, and then come back towards this. Value is slightly overlapping to higher. It is still, we are still just like a 15 minutes into the first period. Volume can be maybe around same as yesterday if this trend continues. I'm going to leave it here. I just need this little day here. All right. All right. It is curious, This job it has a lot of, most job is observation here, all the time. All the time you have to be doing adjustments. But the adjustments you do is not you cannot adjust the market. You can just adjust yourself. You have to make corrections. You get to know. The more you know yourself, the higher the odds of success. Something that, for example, I realize is, I apologize. I said before that this streaming was getting in the way of trading. I said that before. And actually, there was a time when I stopped doing this. And because it really was affecting. But things are changing. And this is something weird, right? That's happening. It kind of like gives you accountability, and actually that's the reason why I started doing this. I started to post on Twitter as well. I have stopped my I didn't do much posting since this year, right? This is what I did in Twitter before. Okay. Okay, this is ESP to 3s. That's E-mini SP500. Okay, I did have another one, but I don't use that anymore. I was just checking what kind of names I like this one the most. But I have stopped it. I didn't update it, this Twitter, since this year. The last tweet was somewhat, I guess, the last week of December. All right. There was a wild sell-off on Nasdaq, man, and that sell-off was, can you imagine there is short in this market here below this? What happened with these guys? That was bad. It is just try to get in the mind of traders. What traders were trying to do yesterday, short, every time the same thing, same phenomena than here. It's quite risky. Okay, for me, look at this. I'm going to expand this profile. What is this doing? This is continuing the late trade. No? There was an action to the downside. The first half of the day, the second half action to the upside. And this remains. This low hasn't taken this low out. Kind of weak because it's like the seller, but value is like the seller. I'm going to keep this one open. Now check this out, okay? Notice where these highs are. E, F, D, L, M, and now A. How many highs you have here? You can include even C here. 1, 2, 3, 4, 5, 6. You know? Bunch of stops were hit here. Bunch of stops were hit here. But there is the inventory from yesterday is somewhat short actually. Okay, there's a lot of shorts here. There's a lot of trades that are shorting this market just because I believe because it's just too high. This can be okay. This can provide the fuel for this market to keep going higher. It doesn't have to make a new high and doesn't have to end way up here. Remember this high also, there's a non-excess high, this is a poor high, and look at what it is. What do we have here? Okay, magic, right? Look at the magic we have here. Oops, what the heck? What is this? Well, some. Oh, that's a for what? 4,900. Can you imagine what can happen if this market can get to 5,000? Maybe that's what trades are aiming to, the 5,000. You know, the magical powers of the 5,000. Man, the short covering Nasdaq is wild, wild, wild. Ooh. That's terrible. Really bad, really bad. Don't want to be there. I know. Yeah, now imagine this, right? Just imagine the context here. You know, traders saw this market opening, giving it nothing to the upside, and then start to break. Oh, this market is finally I got a short. You know, I was trying to short this market all day long yesterday, and now it's. Hold on a second. I need to take this call. All right, where I was? Oh, I was telling you, you know, can you imagine these traders getting this short here, watching the market breaking, you know, having a wild break at the opening, you know, no give, nothing from the opening start to sell, you know. And I was shorting all day yesterday, and finally market's breaking, sell. You know, and now what it is now? What it is now? It has, you know, this market's to the downside now, but boy, this is super risky to me now. You know, it's very risky, the short here, you know, keep short in this market. I actually can. Don't know, man. I can even look maybe to this area, the single prints here. Look at what we have here for some, you know, mechanical selling here on this area. like a mini 45, right? Like a mini 45. But the short is. Let me highlight this. I will put this. This is this area here. This is where the market can come. I mean, that's Nasdaq. And on the ES, it's trading day. I mean, rotational is rotational so far. The low is kind of questionable. It's right a saddle. Upside continuation. It opened. I'm going to put this line. Now, where does market open? Exactly at the same opening as exactly like yesterday's opening. So there's nothing has changed in this market relative to yesterday. The saddle is down here, you know. Nothing has changed so far. Nothing has changed. All computers are red, but you know, value is, once again, this is still the fixed period. The market is just opening, but value is high, overlapping to high. Not higher, but overlapping to high. When the market opens inside previous range, the odds of rotation are high, and the odds of having rotational day are high also. Oh no, that's one piece of some guidelines, right? The odds of chop are also high. The closer to the center, the higher the odds of chop. What is the center here? Right here. The market open right at the center. The odds of chop are high as well. Prominent points, prominent overnight POC. This is very prominent overnight POC. Have the tendency to attract markets back and forth. Maybe a couple of times. We knew from the opening that this was market with overnight inventory that was mostly long. So some kind of action to the downside, counter action to the downside was on the odds. Nasdaq, you can see that, you know, this is the wild. Look at this movement Nasdaq has, right? There's a lot of back and forth here. It breaks, removes all this inventory, all these longs that tend to go higher. It's removed here, and then it has a wild rally here. Puts inventory, makes inventory super long here in the overnight, and all this inventory from this overnight has been removed now. So that's history. You know, these longs are now out, and this break here can be this is something that can mislead traders, right? It can mislead because a trader can misunderstand this downside movement with something more powerful, when in reality it is just a liquidation of this long inventory. You know? And once this long inventory is out, so there is no more fuel there, you know, that to keep feeding this break. The next thing the market has to do is take these longs out from this day. But these ones are stronger than the ones here. You know, remember? And on all those factors we have considered, I'm not saying that I cannot be short here. right? I say I don't trade the market, I don't trade the Nasdaq, but actually I was short in this movement. But understanding what can you have is the question, right? How long can this be? If the market has downside extension here, this could be the next level to monitor, right? But it just tried there. So if I have a short here, okay, if I have short here, all this inventory is out, so the risk of being short here is very high. It's very high. I'm not going to risk. I don't consider risk based. How can I say this? I don't value risk in terms of money, right? So if I have $500 relative to 50 or versus 50, it doesn't mean I have higher risk, right? I can risk $500 here, and that will be less risk than risking $50 here, because the odds that my $50 are going to be my stop to $50 here is going to be taken are high than my $500 up here. So that's why I don't use these numbers. I don't see risk in that way. I try to see, and I acknowledge this is, for this course, I acknowledge this is very hard. I try to see risk, in other terms. Okay, the spill time. Just a second, please. Now, I'm back. Now, I have now two laws that are questionable. This law coming from fallback, and this law, it's not exactly from several, but it's an area here. When I have these values exactly to the tick from these obvious levels, the market's coming back to check those levels are high, especially Nasdaq. The Nasdaq is even, because it's very thin, right? And, what are the odds there, right? And the level like that holding for long or throughout the session. It can be taken in this, in the same session. Now, we have the same behavior yesterday. What happened here in the ES, for example? Notice what you have here. Traders are trying to short. The market is selling, but each time is having less and less. Now, where's the Nasdaq chart? Oh, here. Notice what's happening in Nasdaq now. No, I don't see this as a long. I see this more like shorts. Market's trying shorting here, and now they're trying to get inside the mind of the traders. Now traders now are seeing this market breaking, and they may have more may have gained some confidence to keep short in this market after watching this. Now, this is just a piece of information, okay? It's just a piece of information. The market has taken this low. Value is overlapping to lower. Here, value is being pushed. Is value, now that we have second period going on, value now is inside yesterday's value. Okay, so value is moving lower. An inside bar is forming. It's going to be an inside bar all the way to the end of the current period. No idea. I still think, here in this market, yeah, there's some signs now that are pointing to the downside, but that short can be risky here. I am not afraid to change my mind. If I see an opportunity in any direction, all right? At the end, this is momentum trading. We all are momentum traders. We all try to take advantage of these movements, of these swings, or these intraday movements the market has. But instead of just focusing, for example, the market is going higher, I have to be long, the market is going lower, it's going to be short. I try to put things in context, okay? And by having this kind of information, you have market profile. I do this also. I used to do this market profile by hand on an Excel spreadsheet. It also gives him an idea, what kind of movement is going on, and how far the movement can go. Right? Look at these longs here. No, look at this is Nasdaq. Look at these longs. Yeah, this is wide short covering here. Yeah? Now, the market has come back inside. They say, oh, okay, this market now is going to go all the way up to here. Where the market is coming from, right? Exactly sell. Couple ticks from sell. Couple ticks. This is weaker than this one here because of how thin this market is. 2 ticks, okay. I have seen traders using 3 or 4 ticks charts in Nasdaq because the ranges are very wide. But I think it just is you lose so much information with having a chart like that. I am not in a hurry to do anything here. How many times have you traded now, for example? If I may ask. Now, let's do something here. If I see this action today, right? This is long liquidation yesterday. But if the market keeps trading sideways, it adds another profile here, and another one, and another one, and another one. The shape that the daily time frame is going to start to form is a P shape. And that actually is short covering. Different time frame, different behavior. The intraday can be short, can be long liquidation, while the daily can be short covering. Isn't that interesting? That's the beauty of information, right? It all depends on how you see And also there's a risk here, right? The biases that you may have. We can have a confirmation bias here that we will ignore. We will just ignore the information that doesn't fit our biases. That doesn't, you know. For example, what I mean with that, I can have a long here, long here, long here, and I can see the market going lower and lower and lower and lower and lower. But I will see, I will reject this information. My brain rejects this information that shows that my trade is wrong. And what I will see just this high. I will see just market going higher here, going higher here, going higher here. Yeah. So getting to know ourselves and how our brain works is very helpful. It can help us. Trading, trading is so hard, man. This business is super hard. Super hard business to be. B, notice where B has been bought, for example. Okay, I will carry on this information, this high and this highs here, what the market is doing, right? Still, this M has not been taken. Okay? We don't have a direction today. We don't have direction. This is an inside bar. This can be to the downside. There can be a trend to the downside. It can be a trend to the upside. If C, let's assume B ends, with B range is going to remain until the close of the period. If C takes high, takes B high, that will give direction to this market to the upside. But if C takes B low, the actions to the downside. How do you think about that? So there's a lot of imagination here in this business as well. You always have to be thinking, we always have thinking of these scenarios, what can happen, what about if this happens, what about if this other thing happens, what are they going to do, what can I do, what the market is going to do, what traders can do, what traders can do if they are cut short, what traders can do if they are cut long, all those possibilities. Oh boy, this market is one of the things that we have to realize as well is if we don't have a market to trade, so we don't trade. Got any questions or comments? Please let me know. Canada, Switzerland, Colombia, Spain. Oh, Peru, there's some Peruvians here. Vietnam, Saudi Arabia, India, Germany. Alright, buddies, alright, brothers, alright, fellow traders. I'm going to call it a day. I don't have anything. I haven't placed any kind of trade. I mean, I did some short in Nasdaq, which, quote unquote, I don't trade. I'm seeing some signs. You know, it's a balanced day. You know, balanced guidelines apply. Go with the breakout of balance. Fade the breakout that fails. Now, but the most important, this is an inside opening. Opening inside trading range. Inside previous day trading range is an advertisement for chop. And the odds of rotation are high actually, or higher, or have increased when we have this kind of openings. Alright? Okay. I wish you guys a good rest of the day. Stay safe. See you later or see you tomorrow. Bye bye.